Debasement, the arrogance of the IMF, the arrogance of the Fed, the arrogance of the World Bank, the arrogance of JP Morgan and Goldman Sachs and the bailouts. All those accumulating sins of thinking we could work with impunity with our currency and our monetary policies has now kind of hit that uh-oh moment. It is the mother of all central banks. It has all kinds of political immunities and tax immunities, and if you take it's the dark side of the force when it comes, if you look at central banks skeptically, and if you look at the Fed skeptically, or the Bank of England or the ECB skeptically, and you look at the history of the creature from Jekyll Island, which is how the Fed was created, by what is effectively a cartel, a racket of insider bankers. If you look at it negatively, then Basel and the Bank of International Settlements would be the dark star, the mother bank of all banks. I am no fan of the BIS. But when the BIS says we are now recognizing gold, physical gold, allocated on your balance sheet as a tier 1 asset, what they're really saying is we don't like the US Treasury as much as we did last week or last year or 10 years ago. There's a great quote by Henry Kissinger that said to be an enemy of America, well, that's dangerous, but to be a friend of America, that's fatal. Because America will only do what America wants for itself. If we have low rates and more expansion of credit, we then debase the dollar. If we debase the dollar, we have more inflation risk. But now at $37 trillion in public debt, we can't even fight inflation like Volcker could, because we can't raise rates to fight inflation. In fact, raising rates now is an inflationary event, because it just means that the cost of, he's trapped. The darker side behind the stable coin is, look, in addition to making Tether very wealthy and giving, the Uncle Sam a lot of money, this is still a crypto in the sense it's programmable, trackable, and seizable. It's not issued by a central bank. It's issued by a commercial bank or a fintech company. And if you actually think that isn't the same thing as a central bank digital currency, you have to understand how commercial banks and fintech are tied to the hip of government and the Fed. It's the same thing. It's still trackable. It's still seizable. You can still be that Canadian truck driver and not have your dollar when you need it. If you join the wrong group, say the wrong thing, or don't take the right jab 10 years from now. This is setting up perfect control for a major population. When I'm in Switzerland, in Zurich, it's a very wealthy town with very wealthy citizens, but the wealthiest cars, the Bentleys, the Ferraris, the Porsches, they have Ukrainian license plates. Why? Because there was so many bad, corrupt deals made of so many everyone knew before the war the most corrupt country in Europe was Ukraine. The whole Zelensky crowd have made such a personal fortune. They're coming to Switzerland to hide with their stolen money that U.S. taxpayers paid for. John Adams, he says, look, the countries borrow from each other. When that doesn't work, they borrow from banks. When that doesn't work, they go to war. And when that doesn't work, they just steal from the people. And that's kind of where we're at now.
I'm your host, Farzin Irani. Let's connect the dots. Our guest today is Matthew Piepenburg, who is a partner at Greyerz Gold in Switzerland. He's a Harvard-trained attorney, a former hedge fund manager during the NASDAQ bubble, and later managing director of multi-million-dollar family offices. Matthew is fluent in French, German, and English, and the co-author of Rick to Fail with Thomas Lott and Gold Matters with Egon von Greyerz. Welcome, Matthew. It's a pleasure to have you on our show today.
It's my pleasure, Farzin, to be here. There's always so many things to talk about. So looking forward to exchanging thoughts, swapping ideas today.
Thank you, Matthew. Just for people, the rare person who might not know who you are, honestly, in your own words, could you just describe your journey up to where you are so far in your career?
Yeah, I mean, I always say the same thing. I was an accidental tourist in the markets and risk assets. I came out of school in the mid-90s and out of grad school as an attorney, and I practiced for about 20 seconds before a very good friend of mine, then and now from high school and university, had started a hedge fund. He had come from the investment banking side. This was during the height of the dot-com, just as the dot-com mania was starting in the late 90s. And I had just taken the bar exam. I was looking around at my future, and he says, "No, we're going to start a hedge fund. This tech boom. It's going to be great. Everything's going up and to the right. It's all about the Internet of Things. This is going to be extraordinary, and we're going to buy some pre-IPOs from contacts at Goldman Sachs, and it's just going to be just the best of times," which it was, and that was a period. It was a mania. To Charlie McKay's point, that was the madness of crowds. This idea, if you put a .com on the top of anything, it would do well. We had the classic examples of pets.com and toys.com. That kind of .com pre-IPO period at Robbie Stevens on the West Coast, and just everyone spitting out .coms. That's my learning curve in the markets, and I'm not afraid to admit we didn't know a stock from a bond. It was just a momentum sentiment trade that of our generation that you couldn't miss. And for a couple of years, to quote Dickens, it was the best of times and it was the worst of times. But for a couple of years there, it was just extraordinary. We didn't know a lot, but I will give us credit for knowing that we at least knew it was a bubble at some point. And so during the late 90s and turning into 2000, we were grateful for the support that Greenspan was giving the markets and that the tech bubble was giving our balance sheet. But, there was a sense of, okay, if you look outside of the pre-IPOs we invested in, the actual market in our IPOs themselves were really not valued to anything real. It was a massive sentiment trade. So we were lucky to get out a couple months before April of 2000 when it just tanked. And we were in positions that had really no earnings and really no story or narrative or frankly even a market, but there was just this huge momentum behind it. Long story short, we were very lucky. That's all I'll say. And really, it's not even false modesty. I mean, we really were lucky. And then, of course, you have a high class problem that no one really cries a river for. Is okay, you've made some lottery ticket wealth on the NASDAQ on these IPOs. You've seen a bubble form. You've seen a bubble end, because by April of 2000, it was really coming to a fruition moment. Then we started a family office, and then we, started investing in other things besides risk assets. And I looked at other asset classes, and that's when my education kind of started to really become from just being a lucky punk in the late 90s, in my 20s, in the late 90s, to being a responsible fiduciary and making good and bad investments in real estate, Hollywood, nonsense and real sense, private equity, credit, other hedge funds, other asset managers. And eventually I was with I was part of a multi-family office. So we had billions under management. I climbed my way up to managing director there. And that's where it's really fascinating, Farzin. That's where I got the education of, okay, you're allocating large amounts of money. And that means that the various different alternative assets and alternative asset managers. So that was long, short equity, credit, multi-strat, credit and equity, stocks and bonds. You're looking at real estate, of course. You're looking at energy. You're looking at oil. You're looking at some hard assets in the family office space. But you're really just, you become a good BS detector, because when you have that kind of money to allocate, usually the other side, on the sell side, answers the phone calls. So you get to talk with the good, the bad, and the ugly of all of these asset classes. And you really do meet some extraordinary portfolio managers and some really interesting entrepreneurs. And that, I think, at that stage, going from lucky in the late 90s to a fiduciary in the 2000s, is where I got to look under the hood with a team of analysts with me and to talk with portfolio managers who really did understand risk management rather than just levered long positions in a market that was basically a tailwind market because the Fed was supporting it. You could separate the lucky from the smart, basically. And the smart were usually ones who recognized the sentiment and the momentum of that market and had no apologies for it, but also had some type of risk awareness, some type of macro awareness, and were really truly diversified as opposed to diversified in their allocations. And again, whether I was in New York or whether I was in London or whether I was in Asia or whether I was in mid-Europe, I got to speak to people over and over and how they were investing. And whether it was Jeremy Grantham, who was a genius out of Boston, or some really clever fellow in London, I got my education that way. And I started to really learn that the best stock pickers, so to speak, or the best stock portfolio managers were former credit investors. In other words, they understood interest rates, they understood bond markets, they understood debt risk. And usually when they would make a projection on the markets, they would start with where the risks were, whether what they promised to give me in a return. I really respected that. I respected fiduciaries or portfolio managers who weren't just trying to sell me their book or sell me hope. They were very aware of risk first and then return second. And I think the best example of that type of mindset was probably Jeremy Grantham at GMO, who at the same time that I was the lucky idiot in the dot-com bubble, was heavily in cash. When we were up 250% on one stock, he was annualizing at 6%. But he was a far better portfolio manager than I was. And his understanding of not just trying to try to time a bubble, but to measure and track a bubble during that dot-com era when I came up was really fascinating to hear from him. And he's been retired for 15 years now, but the lessons I got from folks like that about risk, even when the markets are like sirens pulling you in and promising you everything, and they can give very generously in the short term, even a long term, but you still, even if the market is being generous to you, you have to be aware of the risks. The risks that I was unaware of in the way that Jeremy Grantham was in 2000, which of course we all saw in 2008 during the great financial crisis, to today are extraordinary. I find this even far riskier than 2008 or the dot-com bubble. So these are all lessons. And finally, I once I understood market risk, credit risk, I understood currency risk, and that's we can talk about that. But when you run credit cycles like this and you monetize debt with more debt, and then you pay for that monetization with really money created ex nihilo out of nowhere, and you extend credit to the levels we've extended from the banks, that debases the currency. So whether you're a hedge fund manager, an attorney, a dental hygienist, a bricklayer, a carpenter, or a government official, however you measure your wealth in fiat money, it is being debased in a slow frog boil that is quantifiable. And once I understood the equity risk, the credit risk, and then the currency risk, that's when I got into understanding precious metals through geniuses like James Turk or my colleague Egon von Greyerz, who have been in this space when I was still a kid, when I was still having babysitters. These guys were trading commodities and understanding currency risk way ahead of the crowd. And now, guys like Egon are my colleagues. So it's been an interesting evolution from basically lucky idiot in his late 20s during a bubble to sound money, precious metals investor out of Zurich, which is for many reasons the right jurisdiction for this particular asset class and for me. So it's a long answer to a short question, but it was .com to boring precious metals, of which I'm very proud right now.
It's not boring at all, because if you take us on the journey, and that's exactly why I interview people like yourselves and people who have opinions, because at some stage there was a seminal moment for them where they realized all is not well. For me, working in the banking and finance industry for 18 years, for me that seminal moment was during the global financial crisis when, having worked in New Zealand and Australia, housing was seen as a one-way street to prosperity. Everyone obviously went after that one dream only. That's when I dug in deeper and I realized, again, I have degrees coming out of my ears myself, an MBA and all of that, and written papers on economics and fiscal and monetary policy, but no one taught you about money or where money came from. And I think, and I believe now, it's been done on purpose. In fact, most of my guests I talk to, I ask them, what do you think is the biggest misconception about money? And that's when I understood about precious metals and all of that. Do you want to talk about what do you think, in your view, would be one of the biggest misconceptions about money?
You raise an interesting point, Farzin. I mean, again, myself, I'm old now. I'm in my mid-50s. I'm a dinosaur, even. And it's funny. But when I was in grad school, we didn't really. No one in the markets talked about the Fed or the FOMC or what banks do, and banks lend and they clear money, or they clear currency, I should say. Those are their two roles. They'll always lend, but the currency they're clearing and the counterparty risk and the currency is never really doubted. It's just dollars mostly on the SWIFT system. It's world reserve currency. It's immortal. It's unstoppable. It's our currency, your problem, as John Connolly said in this, later on after Kennedy assassination, when we had the world reserve currency status. And then I realized, wait, we're clearing currency. We're not really clearing money because that currency floats and it's not backed by anything. And by the way, to your point, in grad school, no one really talked about monetary policy, QE, QT. These things weren't there. We didn't sit on the edge of our chair every day wondering what the rates were going to be, dovish or hawkish, to make a market determination. We still read Benjamin Graham, and we still looked at balance sheets and financial statements and net income margins and thought that that was what was creating fair price discovery in a market of stocks rather than a stock market. And then I learned, like you, that the education on money was woefully, and I would say deliberately, ignoring precious metals for a reason, which I'll get into. And secondly, just kind of head in the sand about the long-term risks of measuring whether it's counterparty risk at a bank or personal wealth in dollars or euros or yen or Deutschmark or yuan. All this fiat money is a slow, beautiful ice cube, and it's melting. And as it melts, it creates all kinds of rust and cracks and problems in the system. And, why is it for 25 years when I went to bank X, Y, or Z for my business there, private wealth managers would always say to me and many others, gold is too volatile. You got to stay in these categories. When gold, if you look back, you can pick your statistical window, but gold has outperformed the S&P in real terms. I mean, and it's fascinating to me, even in risk-adjusted terms and with total return, this asset, not in every market cycle, not in every statistical window, but in the last quarter of a century has greatly outperformed even this S&P bubble. And yet it's being pronounced as too volatile. Or in grad school or in economics, the Austrian School of Economics, the Schumpeters and von Mises of the world, the idea that debt destroys currency was never discussed. It was never discussed. And certainly, like I hinted, in the PWM space, private wealth management space, of good, smart banks with good, smart people with fancy degrees in schools, or in the RIA, Registered Investment Advisor, industrial complex in America and elsewhere, gold is just too volatile. It's a pawn shop asset. I don't think it was always deliberate dishonesty, but it was the meme you were taught, and it was the understanding that the real safe havens are in smart allocations in different asset classes. But I think it's actually at some ground level, and this may sound tinfoil hatted, I think it's a very deliberate determination by the education system and by the political system, and of course the banking system, to keep gold to the side for decades. Now they can't. It's undeniable, and we'll get into that. But, as I've said, there was a lot of great books written during the time, and we went off the gold standard in 71 in the U.S. And the biggest concern when the Fed chairman and the president and Kissinger and others would get into the White House for their mornings of Master of the Universe, reshaping the world, their first question after we got off the gold standard is, what is the gold price? What is the gold price? Because gold rising is really many things, but the most important thing, it is a neon flashing signal that the dollar is losing credibility. Regardless of its relative price on the DXY versus other currencies, when gold makes significant headline moves, that's not just great for gold investors or speculators. What that's saying is the underlying currency, the world reserve currency, is losing respect, losing credibility, losing trust. So even in the 70s, when Nixon promised that the decoupling from gold would be temporary, fast forward 54 years, we haven't done anything about it, and B, that your dollar would be worth just as much tomorrow as today. Those are two blatant lies. But notwithstanding the fact that those are blatant lies, just amazing, one of many to come out of the DC cesspool, that we haven't seen that there's been a massive decline in the purchasing power of the U.S. dollar vis-a-vis gold in those 54 years, over 99%. So that's not a gold bug case. That's a sign that the dollar is getting weaker. And they were worried every day, where's the gold price? Because they were worried about credibility for the U.S. dollar. And since that time, when they were worried, they created other ways to create demand for this. They put lipstick on the pig, basically, of this debased dollar by creating the petrodollar system in the OPEC nations. Now worldwide oil has to be pegged to the dollar. Brilliant move to buy time, to create demand for this dollar. They inflated the oil price to create more demand for the dollar. They made it the key of the international SWIFT system for payments among banks. Even countries outside the U.S. in loans outside of U.S. banks are basically lending in U.S. dollars, so it's dollar-denominated credit. In other words, they created this massive, as Brent Johnson would say, milkshake straw-sucking sound where there's dollar demand constantly from the global system because that is the exorbitant privilege of the world reserve currency. And as John Connolly said, our currency, your problem. And for many, many years that worked. We created these false sponges to absorb otherwise debased dollars all over the world. And we created the IMF and the World Bank to give usurious loans to South America and the rest of the world and Africa. In other words, we created sponges everywhere to drink our rotten dollar. Great, fine, realpolitik, that makes sense. The problem is our currency, your problem, is now, after many, many decades, hit that wall where it's our currency, our problem now, because we have taken debt to such extraordinary levels. I mean, in 1995, when I got out of grad school, public debt in America was 8 trillion. Now it's 37 trillion. So we've gotten too exorbitant with our privilege. We've lost credibility. We've extended too much debt. We've printed too much money. We've extended too many IOUs, US Treasuries. And in addition to just acting arrogant and usurious with the rest of the world, including the BRICS countries, which are now reacting, of course, and all those decades of arrogance, the confessions of an economic hitman, that kind of John Perkins recognition that the arrogance of the IMF, the arrogance of the Fed, the arrogance of the World Bank, the arrogance of JP Morgan and Goldman Sachs and the bailouts, all those accumulating sins of thinking we could work with impunity with our currency and our monetary policies has now kind of hit that uh-oh moment. And that really big turning point during COVID was when we weaponized the US dollar in 2022 against a major nuclear power, and we froze its FX reserves. It didn't matter how much, 350, 400 billion may seem like a hiccup, but the fact that we weaponized a neutral reserve currency, that was a turning point. Because now, in addition to being an over-indebted issuer of the world reserve currency and exporting our inflation and our monetary policy where the rest of the world was the dog wagged by the tail of US policy, well, now we've gone a bridge too far, because now we were also saying we are weaponizing, we can freeze this dollar, we can freeze this treasury against not just, Iran or Venezuela. We're going to go after Russia, which is the R in BRICS, and already in trading arrangements with China, which is the C in BRICS. And whatever you think of Putin, and that's a rabbit hole that's not worth going into, or whatever you think of Zelensky, that was a mistake. It was a major mistake, because the rest of the world, friend or foe or on the fence when it came to the US dollar, was thinking, gosh, if they can do that to Russia, a nuclear power, if they have that type of audacity, they can do it to all of us. It was no coincidence that from that day forward, the acceleration of de-dollarization, which isn't a conspiracy theory, it's a reality, the acceleration of petro sales outside of the petrodollar, the acceleration of creative trading arrangements, creative currency arrangements, and certainly the acceleration of gold stacking by central banks, in particular Eastern central banks, is quantifiably tripling. So that was, for me, I may have understood gold somewhere in 2014, but the world understood gold around 2022. I wrote an article, again, not alone, there were many others, but I said, this is how the West was lost. This is how the dollar doesn't disappear. It doesn't lose its world reserve currency status, but it loses its hegemony. It's still supreme for now, and it will be. We could talk about that, but its hegemony and respect changed that day. And as the dollar and the US Treasury became less trusted, gold, once again, as it does throughout history, did what it does best. It slowly came back into the horizon, into the headlights, and into the monitoring boards of major counterparties, major commercial banks, major central banks, as a safer, more dependable, more trustworthy asset than the US dollar and the US Treasury, which we weaponized after going into debt over our ears. So that was fascinating. And now the dollar is not as trusted. The US Treasury is not as loved. And we're seeing evidence of what that means in so many areas, in the bond market, in the currency market, in the gold market, in our foreign policy, and it's certainly in our monetary policy. So all of this comes back from debt, and all the debt has ramifications, ripple effects on the dollar. And these aren't even, Farzin, these aren't even gold bug or gold or precious metal discussions anymore. They're pretty universal. What was not discussed in grad school and should have been discussed is now on the headlines everywhere. Gold revaluation, a gold-backed US Treasury. These are now things coming up on the horizon that were unthinkable 5 or 10 years ago. And now it's headline policy because the jig is up.
As you said, the jig is up, Matthew. Thanks for that. And the point that you covered there, as I said, a seminal moment, and I think exactly like you. I think it was when the Ukraine-Russia conflict started and when they froze the funds, as Jim Rickards has also said, and many people have commentated on it. That is the time when every other country, whether it's the UAE or China, started selling US Treasuries anyways. Now it's Japan selling US Treasuries. And that's when even a country like India was like, okay, what do we do next? So countries like India and Turkey were buying gold. Other central banks were buying gold just to diversify from the US Treasury. And as you said, since then, gold is being looked at differently. Obviously, the less they talk about gold, they don't want to acknowledge it, first of all, because gold is money. It's God's money, as they say, gold and silver. So they don't want to talk about it because the minute they talk about it, it gets acknowledged. And it was this Russian moment, freezing the funds, that got it into people's minds. The other thing I just want to talk about, obviously, I was raised in India, but then I've lived overseas. In countries like India and China, we just gift gold and it is just seen as wealth because that is exactly what you do. Whereas in Western, wrongly might be calling them democracies because they're not democracies so much nowadays. They're turning more towards dictatorships. But in Western democracies, like now, leave your money in the bank, earn a return. And I think, I can't remember the commentator, again, this could be, I think Jim Riccardo says, a dollar is not a dollar. You have to put it in a bank to earn interest, which means there's counterparty risk. Whereas with gold, as you just mentioned, an ounce is an ounce is an ounce. It's not that gold is volatile. What's your measuring stick? Because even in US dollars, if the US dollar is depreciating, I think other currencies are depreciating a lot more. Do you want to talk around the BRICS dynamics? Because I've also heard that, yes, I agree with you, US might not lose the reserve currency, but the BRICS are talking about gold as a settlement currency, trade settlement currency.
Exactly. And it's really important. And they're doing what anyone would do. And we can't criticize it. Trump, again, it's not about left or right. I can critique or applaud Trump all day long. It's not about Trump stupid, Trump genius. We got to get past that. Trump blaming the BRICS for what he called degenerating the dollar is simply incorrect. We degenerated the dollar ourselves by going into debt and then debasing our currency to inflate away that debt and exporting our inflation for generations. So you cannot blame the BRICS. That doesn't mean I'm pro-Putin, pro-China, want to live in Shanghai. No, but we just have to be honest. You have to be honest when you make a mistake on a sports field. Okay, I fouled, my penalty, I'll take it. Don't blame the other team when you miss the ball. We can't just blame the BRICS for destroying the dollar. We did that ourselves in the West in general, in the US in particular. That's quantifiable. But I think what the BRICS are doing is exactly what I would do after years of what they call seigniorage, of always being under the exorbitant privilege of that US dollar and that Fed policy, of kissing the ring when the US exports inflation. And, you know, to your point, like you said, in India or China, and I've been to Turkey, when you have conversations in these countries, gold is so obvious culturally, historically, because they've been under the boot of so many different colonial powers and currencies and experiences. Just like on the German side of my family, my grandfather, the only real wealth is gold, land, and art. That's a Swiss truism because they've been through occupations, horrific wars, terrible leadership. They have the memory of currencies coming and going. It's discussed around the Stammtisch, the conversation at dinner. Americans talk about Tesla, Ferraris, F1, frickin' polo, baseball, football, whatever. We're such teenagers. And I love America, but we have no grasp of inside our own borders and currency destruction, at least not since the 1930s in the Dust Bowl, when our banks were failing, but the loans that were outstanding, which were not FDI insured, were still outstanding, even though the banks had failed. So farmers were broke. They couldn't get loans. Their houses were being foreclosed by banks that weren't even there. The mortgages were transferred. So other than that, America's lived in this splendid isolation, but countries like India, China, the BRICS, they're used to this. And now I think the straw that broke the camel's back was 2022 when we weaponized this dollar. And so what are they doing? Not even, as you know, India has a very different worldview and very different foreign policy than Russia and China. They're not all monolithic thinkers. And Brazil is not India, and the rupee is not the real. And so, of course, there are different perspectives, different concerns, but what all of these countries in the BRICS plus others, what they all have in common is they trust gold. and they have a certain skepticism about U.S. policy, especially now. So what gold is, what they're doing with the BRICS isn't saying, okay, we're going to get together, we're going to sacrifice our regional currencies, we're going to tie everything, rupee, real, yuan, ruble to gold. It's going to be redeemable only out of Moscow, and we're going to trust Russia if we need to redeem our BRICS currency into gold, etc. That's not what they're saying. If you look carefully, what the BRICS are doing with Enbridge and other ideas in South Africa and Kazan, they're doing what their finance ministers have been talking about for years. They want basically regional currencies, but trade settlements in gold with real assets and gold tied to local currencies. In other words, we want to have gold a part of how we settle trades among ourselves, not be tied to one gold-backed BRICS currency, which is actually very, very flexible, very brilliant, and very scalable, especially if they have the contingent reserve arrangements, basically their version of the World Bank and the IMF. And they're creating a smaller system of what the West has been creating for years. And they trust gold as a trade settlement currency, not as a backed currency. And I think that gives them more flexibility. And I think the BRICS are doing, again, what I would do. What the arrogance of the West and the U.S. is, no, they can't. We have built this Maginot line of dollar and the SWIFT system, and we have created transfer systems that the world is dependent on. We are the world reserve currency. Debts are owed in our name. We are still holding the majority of FX reserve transactions. We are the Maginot line. And if anyone knows history and knows France, the Maginot line was built between World War I and World War II to protect France from the Huns. And they built this, and I've been there many times with my kids, they built this extraordinary network of forts. And it was understandably defensive and traumatized by World War I. But what did the Germans do when they hit the Maginot Line? They just went around it in the Ardennes. And I'm saying what the BRICS are doing is they're not trying to defeat the dollar. They're not trying to ruin the dollar. They're not even trying to replace the dollar. They're just going around it by creating their own gold-backed trade reserve currencies, by repatriating their own gold inside their own borders, many of whom don't report gold honestly to World Gold Council. So I think Russia has probably a lot more gold, and China a lot more gold than is reported. And I would argue China has more gold than the U.S. But they're repatriating their gold. They're net settling outside of the U.S. dollar in gold transactions. And, there are now 45 countries trading outside of the U.S. dollar, which only happened because 2022 finally pushed them too far. Because not only was America so arrogant to be in debt up to its knees, ears, and then forehead, and still say it's the world reserve currency, do what we say. Oh, and by the way, if you don't play along, we're going to freeze your assets. I think that was like, okay, China and Russia got together with the other BRICS and says, we've got to think 20 years ahead, not 20 minutes now. These are the plans, and this is the tipping point. And again, it doesn't mean the end of the world reserve currency or the end of the dollar. It means a repricing and a re-examination of the dollar. And it also, to me, suggests that, trust in America really felt there for a number of reasons. That was, as Jeffrey Sachs and Mershon, that was an avoidable war, in my opinion, but that's another rabbit hole. I think a lot of things went wrong in 2022. And again, Barack Obama, who was the president when Biden was the vice president in 2015, when we had problems with Syria, despite problems with Syria, he says we cannot weaponize a neutral reserve asset against a major country. We can't keep doing that. Robert Triffin came to our Congress in the 60s, said, don't do this. And again, John Maynard Keynes, when you have a neutral reserve asset, you can't politicize it. Well, somehow Biden managed to do that despite being under the tutelage of Barack Obama. I think that really was one of the worst foreign policy, monetary policy decisions made in the history of our country, other than killing the gold standard. So again, these are all connected things. But the BRICS, they're not heroic and they're not evil. They're doing what all nations do, thinking of themselves and cooperating at a level that we're not seeing right now to the U.S. The U.S. thinks of itself, but it's not cooperating at the level. It's weaponizing its tariff system, better or worse, and creating, I would say, creating more tension, not winning a lot of hearts and minds from Canada to Switzerland to Liechtenstein to Brussels to the rest of the world. So that is for each of us to decide whether it was smart or not. But the world changed dramatically, in short, Farzin, in 2022. It changed dramatically in 1971. It changed dramatically in 2008. All of these things that are changes, though, whether it was getting off the gold standard, whether it was the great financial crisis, whether it was the dot-com bubble in the markets, whether it's now foreign policy in the Middle East or the East, and whether it's the rise of the BRICS, all of these things happen, not to mention the repo crisis, the gilt crisis, the banking crisis in 2023, the Liberation Day crisis in April this year. All of these things we're talking about come back to a country that's making policy out of desperation because of its debt levels and its currency is less trusted. It's a slow and steady process towards a currency cliff, the evidence of which is everywhere and should not be considered gold bug, gloom and doom talk. It's not. I've been bullish in markets on and off throughout this series, but the long-term direction of the dollar and the long-term direction of debt is there for everyone to see. What you do with that set of facts is up to each investor and each individual, politically, financially, and investorially. But my response and the clients that we have and Egon's response as well, one thing I can control is gold and silver, and certainly the population of India and Turkey and other countries that have been through this, their response historically is gold and silver too, not as a get-rich-quick asset, but as a protect myself from paper money burning right in front of my eyes. And that is just where we are in my mind, and that's what I see in my travels, in my history, and my experience.
Good you covered that, because I wanted to just go a little bit deeper on that, because the Western monetary system is just based on debt. It's a journal entry. You owe us this much, and there's a credit out here. Whereas I think, as you said, it's an exorbitant privilege to have the US dollar. Obviously, as other commentators have said, it's a something dilemma, Griffin's dilemma, being the reserve currency as well. So I know countries like China aren't rushing out the door saying make us the global reserve currency, because they know there's problems with it and the capital account and all that kind of stuff. And I think, as you said, go around the world and they just need to settle, because the settlement was a debit or a credit. And if you move away from that, as you said, maybe the UAE is exporting gold to oil to China, and after 3 months, they settle the account. So nobody owes anything anymore. As you said, the way I see it is something changed not just then, but can you talk about, because I know you spend a lot of time in Europe and stuff. Germany started getting its gold back from the New York Fed. And I heard recently also, obviously after the global financial crisis, Basel had requirements. They wanted to make gold a tier 1 asset. So the people who were watching, or the insiders, or people like you and I, knew that was going on behind the scenes. Aren't buying gold now. We were buying gold a long time before. Is that still happening in Europe, or has that been delayed for some reason? Or what do you see they foresaw before the fact?
You asking about the tier 1?
The tier one. Why was that changed, and has it been implemented in Europe yet?
Yeah, I mean, effectively, it becomes effective July 1st, 2025, the official tier 1 status of gold in commercial banks. So what that would mean is when a bank lists, I'll put this into some perspective, people have different levels of awareness of banks. So it's just totally understandable. There's probably someone who know much more and someone who know very little. That's fine. But up until recently, the Bank of International Settlements, which is based out of Switzerland, out of Basel, which I drive by constantly. It's a beast, and it is the mother of all central banks. It has all kinds of political immunities and tax immunities, and if you take it's the dark side of the forest when it comes. If you look at central banks skeptically, and if you look at the Fed skeptically, or the Bank of England or the ECB skeptically, and you look at the history of the creature from Jekyll Island, which is how the Fed was created, by what is effectively a cartel, a racket of insider bankers. If you look at it negatively, then Basel and the Bank of International Settlements would be the dark star, the mother bank of all banks. If you look at it neutrally as just a good banker, they create liquidity, they create regulations, they create bank safety. So you can look at it neutrally, negatively, or you can even see it as a positive. I look at it more negative to neutral, much more negative than neutral. But Basel creates regulations to make banks safer so that they have a certain amount of assets on their balance sheet, not everything levered out into the world and gambled out into the world with your deposits. And so Basel was intended to make banks safer. Now, of course, they failed. And by the way, the Fed was created to make banks safer and more liquid too. And they've all failed. We had the great financial crisis in 1929. That was 16 years after the Fed was signed into law through a Tom Clancy-like novel of events. But get past all that. So yes, Bank of International Settlements, the mother of all banks and central banks, and therefore commercial banks, says you know what? Up until now, the tier one asset that made banks safe and that made us trust their balance sheets and then knew that they were able to withstand market shocks was their holding of US Treasuries. US Treasuries were considered risk-free return. They were issued by Uncle Sam, home of the world reserve currency, home of the world's greatest economy, home of the world's greatest bond market, best regulatory market. This is the sacred cow. This is the tier one asset. If you say you have 100 million of US Treasuries on your balance sheet at Bank X, that's valued at 100 million or 100, whatever you say you have, 100 billion, it's 100 billion. If you have tier two or tier three assets, they're less liquid, less trustworthy, less confirmable. Well, that's a different story. So if you had 100 billion of gold, we wouldn't give you 100 billion on the balance sheet as true value. It might be a significant discount to that. Fast forward post BRICS, acceleration, post 2022 fiasco, Basel III Accords, which said even the exchanges that traded and the banks that have gold need to have, well, they were basically, they had to have more allocated, segregated gold on their balance sheets. That was the first step. Banks, if they say they have gold, have to actually have the physical gold in a vault at their bank with a warehouse receipt that says it's there and not levered or leased or hypothecated on the system. That was the first step. But also, what the BIS is saying is we're going to now give, this is all post-2022 moment, post-BRICS rise, post-de-dollarization, post-depetrolization, and a more multipolar world. The BIS also said, by the way, now physical gold is a tier one asset. So if a bank says they have 100 billion of physical gold on their balance sheet, we're going to value it at 100 billion, not 50 billion or 70 billion. And so that's a great accounting reality, but far more important, Farzan, is what it's saying, what that message is. And again, I am no fan of the BIS, but when the BIS says we are now recognizing gold, physical gold allocated on your balance sheet as a tier one asset, what they're really saying is we don't like the US Treasury as much as we did last week or last year or 10 years ago, because what they know is that the U.S. Treasury gives you a yield of, well, right now, the U.S. 10-year, I got to look at the U.S. 10-year is about 4%. What everyone on the Wall Street knows, it's the open lie, it's the hidden secret, is that yield on the 10-year, which is the risk-free return for holding Uncle Sam's sacred IOU and promise to repay, is actually a defaulting loan. Because actual inflation, not the inflation measured by the CPI scale that the Bureau of Labor Statistics, because that is an open lie. It is just it's been modified 22 times since 1980. If you use the same scale to measure inflation and you're being modest and you're being generous, actual inflation in America is probably 10%. If the yield on the 10-year is 4%, you're losing negative 6% by taking an investment in this risk-free return, which is why I call the 10-year return-free risk. And that is the safest tier one asset up until now. And we all know it's a negative returning asset. In my mind, technically, a negative returning bond is a defaulting bond. We haven't just refused to pay, but we are basically defaulting on the US 10-year. Long way of saying, to set up this answer, well, now gold is another tier one asset next to the 10-year. I think it's a laughable comparison because the US 10-year isn't at all what it was 10 years ago. And it's what it was 20 or 30. It's not my father's bond market. It's not my father's IOU. It's no longer trusted. Again, too indebted, too weaponized, too inflated away. So when the BIS makes gold a tier one asset, that's not just saying the gold got shinier. What it's really saying is the US 10-year, the US Treasury, and therefore the US dollar aligned to it are less trusted, less powerful. That is an absolute watershed moment for the BIS to admit. And I think that's confirmation of the housewives in India who own more gold than the Bank of England. It's confirmation that you silly little people in these colonial BRICS countries who didn't figure out, no, you were right. And so what's ironic is the West and Gordon Brown, who sold all that gold for $270 an ounce in 1980, he looks like an idiot because he was an idiot. Because like almost every Western politician, his only interest is the next 4 years or the next election cycle. They're absolutely incompetent, negligent, almost across the board. Midgets running financial policy for short-term gain and insider deals. And I know that sounds very cynical, but that's true left or right. You can find evidence of this everywhere. There are occasionally good central bankers like Thomas Hernig. There are good economists like Lord Mervyn King. There are good pundits out there, but the politicians, the policymakers are really, if you get under the hood, appallingly incompetent. And so, but even notwithstanding that, the BIS is saying out loud, well, gold is better than US Treasury. It holds its value better. You can save in gold. You can trust it to hold its value far better than that paper dollar and that US Treasury, that IOU, that paper promise. That's a revolutionary confession. And that's a revolutionary signal of where the next 20 years are going. Again, not the end of the dollar, but less credibility, less trust, less store of value, prestige. And we can go into why that should be obvious. Again, if you had a can of 250 gold ounces in 1920 at $20 an ounce, they'd be worth $5,000. If you kept that can until 2025, that same 250 ounces of gold will be worth hundreds of thousands today. Whereas if you just put that can of gold in 1920 and changed it for $5,000, that $5,000 wouldn't do you anything today. In other words, it's simple. Gold it holds its value. Paper money loses its value. And the BIS has just said, look, gold's a tier 1 status. You can trust it more. Why do you think central banks tripled their stacking of gold when we weaponized the dollar in 2022? Why is this happening at such a record level? Why is there a new development bank? Why is there a contingent reserve asset? I mean, look, it's 1/5 of the World Bank in size, but when Lehman busted, that was $800 billion balance sheet. China has a $37 trillion balance sheet. China is certainly more important, and they're moving away from us. And, the world population, the BRICS, the raw materials, the natural resources, and the currency are all moving away from this once exorbitant, privileged, arrogant, Western, G7-led, US-dominated market. Again, not the end of these markets, but a radical demotion in their power and their leverage. And this gets into the revaluation of gold conversation too. But it's all connected, Farzin. But yeah, the tier 1 status is huge, not just for what it says about gold, but what it says about gold as a settlement asset, what it says about gold as the directional real store of value, and what it says about the old ways of the U.S. 10-year. It's a major demotion. You've gone from general to private, basically, as the U.S. Treasury. And very few people understand
Yeah,
that.
I think very few people understand that. With gold, the way I see it is, it's nobody else's liability, as I've heard yourself and Mr. Greyerz say as well. The difference between that and a treasury is somebody has made you a promise that you're expecting them to keep in the future. And as you said, the inflation numbers are a lie. And the whole point is, since we woke up this morning, the debt has gone up even more. So regardless of whether you do anything or not, inflation's baked in the cake. And when I get interviewed on a show called Money Talks in New Zealand, the one thing I think most people didn't understand was inflation. And I said, think about this, because people don't get it in the terms of housing, because housing is such a dear asset in those kind of countries, New Zealand, Australia, Canada, even America. And I explained, it's not that your house has gone up in value, it's the currency, the measuring stick, that is losing value. And if you think you did well in housing because housing has gone up 4 times, right? But a dozen eggs used to cost you $5 and now it's cost you $30. I'm just giving a stupid example in the number. But the eggs have gone up 6x. Should you have invested in eggs? Yes, it's perishable goods. I get it. But the whole point is the currency, when you put it in egg terms, because they still get a dozen eggs rather than the number hasn't changed. And that's when I explain it and they get it. I get it now. And the thing with gold also, I think, as you said, you said it so many times, the world trusted the US because they had the rule of law, and they broke that during the Russia-Ukraine conflict. And they've shown, even recently, Trump, he goes into hysterical tweets and stuff like that. India was, in fact, when I visit India, people are like, I'm talking to some high net worth people, and they think we were going the American side, because obviously I believe we're going into World War III. It has already begun. It's just sides that need to be taken. And I was thinking India might go the Western way. And recently with Trump's tweets, it seems he's even pushed them in the China-Russia corner. What are your views on how does this play out, especially given you're in Europe? Because I think Europe seems to be getting itself into trouble trying to back Ukraine. And I think they're trying to do that because they need to default on their debt. And war will be used as a convenient excuse to blame the boogeyman. Do you want to talk around that?
Yeah, there's a lot of questions, and I want to be sensitive. There's going to be people, I'm neither left nor right at this
Me
point.
neither.
I'm a classic libertarian, and I'm not pro-Trump or anti-Trump. I was never pro-Biden or anti-Biden. I was just pro-free market capitalism, pro-honesty, pro-candor, pro-direct reality, pro-facts. That may seem like a cop-out. I can think of a lot of ways to critique America. And I always start by, I'm an American. For God's sakes, I have a massive bias towards America. I still think it's an extraordinary country, an extraordinary history, and extraordinary potential. And I'm very, when you say, what will America do? You have to also say, well, what will Trump do? They're not the same thing. Just like, Keir Starmer, the Macron is not France and Keir is not the UK and Trump isn't all America. He's many, but even those who are pro-Trump have kind of taken a step back. So you can't just say, what will America do? What will Trump do? It's such a nuanced question. What will Biden do? What will Obama do? First of all, to me, whoever's in the White House, it's not really the leader. There's so much other powers. That's a whole other rabbit hole. Who really makes
Let's go there, Matthew. Let's go
America?
there, because I believe these guys are just.
It's not just an APAC.
These guys are just puppets. They're just the front.
They're happy idiots. They're the placeholders. They're literally elected. What Trump was a threat was because he wasn't your typical happy idiot. He wasn't your typical puppet. He wasn't your typical malleable person, but he clearly is malleable. There is still leverage on him. And this is the stuff that Woodrow Wilson was afraid of in 1913, that he has said you had to whisper under your breath, this deep state. That's another rabbit hole. But the point is it the cabinet? Is it the Pentagon? Is it the NRC, these committees of billionaires who determine who the next king will be, Republican or Democrat? Is it the lobbying on K Street that basically bribes presidents and congressmen and senators? Is it foreign influence? You could spend a great deal of time pulling your hair out on each of those things, but what it to me suggests is not just the president. But we do have a president. He does have immense powers. He does have immense power behind him and influencers behind him. You could argue dual nationals. You could argue big banks. You could argue whatever string you want to pull. There are other things helping him make his decisions. In terms of what I see as a European or European American, there's a lot of things I could speak about. There's a great quote by Henry Kissinger that said, to be an enemy of America, well, that's dangerous. But to be a friend of America, that's fatal, because America will only do what America wants for itself. The America of the Marshall Plan post World War II, or the America of trying to help Germany and Japan rebuild itself. That was an extraordinary little moment of cooperation, and you could say purely generous altruism. But they did want to make sure that Japan and Germany never created another Hitler or never created another demagogue. And the best way to avoid another Hitler was to avoid another Versailles, to stop punishing other people and start building them up. That was a generous moment, you could say, in world history. But for the most part, to Kissinger's point, countries have only self-interest. They don't have friends or enemies, just self-interest. When America basically pushed the European countries to support it in every foreign policy and in NATO, and said, you got to punish Russia. And by the way, Germany is burning coal during the embargo. Somehow Nord Stream pipeline Epsteined itself mysteriously. We all know how that happened. But we have these lies that we say, but our allies in Germany, and I spent a lot of time in Germany, are burning coal. They're putting up windmills. Look, I live in the south of France. There's a big difference in the south of France and Frankfurt when it comes to sunshine. I don't think windmills are going to do it in Germany. But they're following U.S. policy in the middle, in the world, in the East, in the Ukraine. They're literally trying to buy oil from Russia while they're forced to sell arms and give support to Zelensky in the Ukraine. I mean, it's crazy. It's schizophrenic. And again, you can spend a lot of time on this. And they're supporting America and its foreign policy, and yet now America is imposing tariffs and saying this is. So there's a million reasons why there's a schizophrenia between Europe and America now. Is it Europe and America, or is it Europe and Trump? Is it von der Leyen in Europe? So it's all nuance. But I will say there is a growing, to answer your question, there is a growing sense of we've been duped for so long in following America, and maybe now we need to think differently. That is clear at the conversation at the bar, the dinner table, the soccer field. What's happening inside the halls of power with Macron or von der Leyen or in the UK, that's a different question. Are they still going to prostitute themselves to the U.S. policy without question or not will be determined. These are many interesting things, but there's no doubt that there has been a break. Trump says, pay for your own security. We've been doing it for forever. Trump blames them on their VAT taxes. We're going to hit you back with tariffs. You can make cases why he's right or he's wrong. What he's not getting is a lot of love and warm hearts. You could say he's getting respect, but Europeans read the press too. I'm an American. I read the press. When the sitting president calls the head of the central bank a loser and an idiot or a moron, even if you think that, and I've called the Fed chairman worse things than that, but I think if I were the president, I'd show a little more decorum. Some people love that about Trump. Others just think this is this is a cowboy. This is a cowboy.
Do you think he's a cowboy, or do you think this is on purpose? Because some people have read his books say he's purposely doing this because he knows he can't fire Powell. Technically, he cannot fire because it's not in part of the Constitution and the law the way it's written. So he's purposely doing this. And then some people say because he's so used to debt and the cost of the debt has become so high. And that is why obviously we'll go there as well with the stable coins and the Genius Act and all of that. That's why they paying off the long-term debt and reissuing at the short end. And that is why he's being so vocal, beating up the chairman on his head, because he's not getting what he wants.
Look, Trump is many things, but he didn't get to where he is by being an idiot. Well, you may not like his policies. It's the same thing you could say about Putin. He's many things, but he's not an idiot. Trump is many things, but he's not entirely stupid. He wasn't just a successful inheritor. He had to survive New York real estate. And he had, Roy Cohn as a friend, and he had a father like his father. Trump sees the world the way he was raised and the way he was brought into it and the way he succeeded in it. And in Trump's mind, he's not, as I said many times, he's not a leader, he's a winner. Everything is a competition. It's a zero-sum game. There are winners and losers. And to win, by the way, you have to have a loser. And to win in New York real estate, you need low interest rates. You need construction loans. You need to roll over debt. And you need low rates. This is common sense to him as an entrepreneur, as a businessman, and certainly as a real estate developer. But whether you're making real estate projects in New York or building chips in California or building tractors in Ohio or Iowa, you need borrowing costs. And if the borrowing costs are lower, that helps you. So you need lower rates. And in his mind, low rates good, high rates bad. Very simple. What he doesn't have is a larger understanding of our debt crisis in terms of what it means for our currency and what it means for our economy. Because if we have too many, if we have low rates and more expansion of credit, we then debase the dollar. If we debase the dollar, we have more inflation risk. But now at $37 trillion in public debt, we can't even fight inflation like Volcker could because we can't raise rates to fight inflation. In fact, raising rates now is an inflationary event because it just means that the cost of, he's trapped, but he doesn't understand. He doesn't understand how just saying I want low rates because it's good has massive ripple effects on the rest of the economy, the currency, and our leverage globally, and our trade partners, and the de-dollarization that's happening on. It's far too second, third derivative thinking for someone like Trump. And I am not a fan of Powell, but I understand Powell. I have to have a little sympathy for the devil for Powell, because Powell, love him or hate him, and I've never written a lot of good things about him. You have to be honest, Powell can't control how much Congress wants to deficit spend. We're looking at a monthly deficit of $300 billion, possibly quarterly borrowing of $1 trillion, which could equal $4 trillion in annual deficits at some point. Literally at this spending pattern, which would mean our deficit to GDP would be 13%. In other words, we have growing deficits at 13%, and our GDP is at 2 to 4. That's crazy. So that kind of second, third derivative problems and what that means for our currency, our global leverage, our peace and security, and other countries taking advantage of our weaknesses and war, he only just sees low rates, better for business, gets me reelected, short-term solution. That is scary, but that's true of all the mental midgets when it comes to macroeconomics that have come into the White House. I would think someone like Scott Bessent could help him with that, but I'm not sure. His vice president went to Yale Law School. I'm sure he's a smart guy. Does he understand monetary policy? Does he understand interest rates? Does he see the connection between rates, debt, and global trade? Does he see the connection between that and GDP growth and that if you build your deficits too high on low rates for short-term gain, like going to a mall for that new pair of shoes you can't afford, eventually it creates much longer-term pain. And even the reshoring of jobs, all these things are connected. He's not seeing that, and no president has.
I think it's getting to that stage where the exponential function has kicked in, and doesn't matter what they do, it's gotten out of debt. In fact, I've heard your partner, Greyerz, mention in one of his reports that doesn't matter who the president is, Republican or Democrat, every 8 years the debt doubles. So regardless of who comes in and what promises they make, nothing's happening. In fact, I think Doge was just a good psyop to make people feel good for the first 90 days, and then everything's been kicked to the side and let's get on with it. But I know debt is not even a real thing, right? And this is why when people like yourselves talk about gold, I get so inspired, because if we can just get the information out there that debt itself is a construct. And I've always wondered, is obviously there's the governments and the central banks are in cahoots. They're working together because the central bank can monetize the treasuries and the debt. And obviously now it looks like the Federal Reserve is the only one who's going to have to buy treasuries. Why are governments allowing central banks to do this? Why? Trump is smart, as you said. He knows he's paying interest on money that the central bank creates out of thin air, as you call mouse click money, MMT, magic money tree. Why are they letting this happen? Do you think there could be a change? There's some people are talking about gold revaluation, but also maybe gold could be brought back into the monetary system. What are your thoughts on that?
I mean, these are massive questions as far as, there are whole books written on it. It's hard to answer it in a few minutes. I mean, the real question is, why was the Fed ever created? Why were central banks ever created? How did these powers come to be? How did these cabals come to be? How did they scare the hell out of presidents and leaders? Because they had financial power, they had lending, they had credit, they paid for wars, they paid for post-wars, and they somehow managed to wiggle their way in to a building. For example, in the United States, the Federal Reserve is on Constitution Ave, right near the Treasury Department, within eye shot of the White House. But the Federal Reserve isn't federal or a reserve. It's not even constitutional. If you really look at it, it is the biggest open lie hiding in plain sight right there in this most impressive building, which we're now paying a lot of money to remodel. It looks very, very impressive. It looks very governmental, very federal, very safe. It is, again, it would take hours. And again, it's an absolute disaster. It is an absolute insult to Article 1, Section 8 of the U.S. Constitution, the very first article of our very first key document, the one that the whole world looked up to, is gold and silver. It's right there. I'm not making this up. Our founding fathers 250 years ago, who had just saw the French Revolution, what was going on with John Law France, England in 1720, when they tried to debase money to pay for debt with money, literally, they called it assignats, other things. It was the same thing. It was QE 1 through 5, British style or French style. The founding fathers, many of whom were flawed, but they weren't stupid, said, first of all, we have to have sound money, whatever that is, gold and silver, Congress, that's it. It didn't say we need a central bank independent coming in and debasing the currency. So the very first thing you have to ask is, how did these banks ever get in there? How did they do this? How do they create debt within a circle between the Treasury Department and the Fed, which really isn't debt? And how do they make that look like it's independent and federal and reserve? But none of these things are true. And by the way, it's not even constitutional. And how did it get signed into law in 1913, right before Christmas, and half the Congress wasn't there? It is a really dark story, but it would take too long to get into. But the first question is, why is it even there? What can we do now? I don't know if we can outlaw the Fed now. That would be a first start, but that would also be a very destabilizing thing. And will we have gold-backed money again? Get back to Article 1, Section 8. It's going to be impossible to do that at these debt levels. Some major crisis has to happen between now and then before we ever go back to a dollar-based or gold-backed dollar, because we have way too much debt and not enough gold. We would have to revalue gold at such an astronomical level that I don't think it would be possible. What I think we're going to do is we're going to admit we've got X amount of ounces. You could say 261 million. You could say we have 8,131 tons. We may have more, we might have less. We've got these gold certificates at the Fed on the asset and the liability side of the Fed and Treasury. They're worth $42 circa 1971. But you know what? Why don't we revalue them to market? That'll give us $1 trillion, roughly. If we revalue those certificates to market, that gives us $1 trillion. Well, we both know that's not enough to cover even a year's interest on U.S. debt. So is that really a solution? The next theory, and I am not here to answer whether it will happen or not. The next theory is, well, let's not revalue gold at market. Let's put in a new bid for 10,000 gold or 20,000 gold. Since we have the most gold, theoretically, we'll reset the gold price. We'll reset the gold floor in London, New York, Shanghai, and St. Petersburg. And suddenly you'll wake up one day and your 3,500 ounce gold coin will now be worth 20,000. Again, I'm not saying this will happen. This is one of the theories they're talking about, is a gold revaluation, or Judy Shelton, a gold-backed US Treasury at some point. Whatever, whether or not these things happen are each worth an hour's separate discussion, but what the very fact that they're talking about this in Congress, at the White House, at DC, and in Trump, of a gold revaluation. The very fact that we're even talking about this is a confession that we already are admitting out loud that our dollar isn't really that respected. It isn't really that strong. And there's no way we're going to pay it back with more mouse click money from the Treasury, or excuse me, from the Fed, because the world has already seen through that lie. They're seeing through that magic trick. They're moving away. We've done the mouse clicking for too long. We've done the debasing for too long. We've done the credit expansion for too long. Now we've got to go to our desperate last option, which is our piggy bank over there that's got these certificates. Let's revalue them. We'll get some quick cash, like a drug addict. Let's get that needle in there quick. It's basically QE using gold instead of a mouse click. Instead of creating money out of thin air, they're monetizing these old gold receipts. They have to blow the dust off them, get them back up there, revalue them to a higher level, and pay off some debt. Put in the TGA, the Treasury General Account, and pay down some debt. And that, even if they revalue gold at 20,000, that would buy us many years of, okay, we bought more time. We'll take our debt to GDP down from 120 to maybe 90%, and that we can now go borrow more. But even if that were to happen, all it does is postpone the fatal consequence of all the drugs. We would still spend more than we take in. We'd still be addicted to debt, and we'd still be addicted to short-term elections. So it would just buy us more time. But the real question, because it could go for hours and I'd never stop, if we revalue gold higher than spot or market price, you have to remember what Kissinger warned about too. Be careful, because maybe Russia and China have more gold than the US. So if we value higher, and I really think they do, and that's another hour conversation on why, but if they do, well, then who has more leverage? If he who has the most gold wins, as Trump himself has said, he who has the gold is king. I hope he knows something I don't know. Maybe we have more gold. To say that and then to realize that we don't have the most gold means we're no longer king. And so it's very complicated. But as Kissinger warned, well, you know, if we revalue gold, it's a short-term solution, but then we lose that leverage for our dollar, and we lose that leverage with our power internationally. And I think China and Russia have been playing chess for years while America plays checkers. I think they've been stacking gold off the record for generations. And so when we revalue, they're going to revalue gold too, and they're going to have a heck of a lot more leverage. So again, very if but. And we can only see, but I think gold will be the conversation on gold revaluation is coming for a reason. We're broke, or we're desperate.
And I don't think any country wants to back their currency by gold, regardless of whether it's China or Russia, because it takes away the open checkbook, right? Yeah, why would they? The governments cannot keep their promises. But I think you touched on that. Scott Best, in talking about monetizing the asset side of the balance sheet, is just, again, a gimmick. It's just taking it from $42 something cents to the current market price is $1 trillion. They spend it in 90 days. We're back to square one. And if interest rates keep going up, I think the cycle we're going into, and I think they started with COVID, but the Federal Reserve, the Fed funds rate spiked up in, I think it was September 2019, and me being inside the system, I knew they had to create an event to create lots of liquidity in the system, shut down the world, let's create lots of liquidity, get poor people out of jobs. You cannot eat food in a restaurant, but you can go to Amazon or order food at home. That is when the Agenda 2030, I think, started playing out, and a lot of people are waking up now. I think there's tinkering on the sides with the gold, or do you want to talk about the Genius Act and the stable coins? Because I know my view on this from some people I follow is in the US, they couldn't have a CBDC anyways, because it's not in the Constitution, and the Federal Reserve cannot issue a currency directly to the public, whereas Europe's trying that right now, and you're in Europe. So I know the European Commission is talking about October 2025 launch date, which lets them have capital controls. And I think in the US, because they couldn't do that, stable coins is a way for them to not only back end CBDC, but also create a bid for the Treasury at the short term. It serves a lot of purposes, doesn't it, for the government? And it's called genius when it's anything but genius.
Yeah, well, that's when you know. And again, this isn't just anyone in America or the world should know. When you call a Patriot Act, you know it's not patriotic, and it isn't. It's appalling. As a lawyer, I can say it's appalling. And that shouldn't be left or right. That should be for everyone to understand. Quantitative easing isn't quantitative easing, just like ethnic cleansing isn't really cleansing anything. It's appalling. And so
it's the exact opposite meaning of what they're trying to say.
It's the exact opposite. It's literally, and the Genius Act is anything but genius, and a stable coin is anything but stable. But this is classic, almost tragic comedy. Shakespeare couldn't make this up. But a couple of things you've touched on. First of all, the stable coin is neither stable nor a coin. The stable coin is really, it's hilarious because it's issued because of the Genius Act, this stable coin can be issued by fintech companies and commercial banks. And it's a blockchain asset with Bitcoin-like properties, centralized by fintech and banks with an audited promise of 1 unit equals $1. So if you want an e-dollar and you're in America and you want a stable coin, you go to JP Morgan or you go to Tether or Circle Internet, you give them $1 and they give you a stable coin back promised backed by US Treasuries. Great. You get a unit. What does JP Morgan or Tether or Circle Internet get? They get to then take your dollar that you actually gave them, invest it in treasuries, get a yield, and pocket the yield, which is why Tether's got $26 billion in profit, has made more money in profits than Citibank or BlackRock this year. So it's a kingmaker for the issuers. You, the end user, get a stable coin. Oh, and by the way, Uncle Sam gets more buyers for its US Treasuries because the US Treasury is what's pegged on the stable coin. So it's a win-win for big tech, fintech, for JP Morgan. It's a massive win for the Uncle Sam because you stablecoin suckers are buying these stablecoins to go spend, but you're really helping finance Uncle Sam. Fine. I mean, I think Tether is the 18th largest lender now to the U.S. government with these U.S. Treasuries. So it's in the U.S. interest to expand the stablecoin market using this DLT technology. But all it is just creating another sponge for unloved U.S. dollars and U.S. Treasuries internal under the guide of a stable coin. And, again, that's the mathematics behind it. What the darker side behind the stable coin is, look, in addition to making Tether very wealthy and giving, the Uncle Sam a lot of money, this is still a crypto in the sense it's programmable, trackable, and seizable. It's not issued by a central bank. It's issued by a commercial bank or a fintech company. And if you actually think that isn't the same thing as a central bank digital currency, you have to understand how commercial banks and fintech are tied to the hip of government and the Fed. It's the same thing. It's still trackable. It's still seizable. You can still be that Canadian truck driver and not have your dollar when you need it if you join the wrong group, say the wrong thing, or don't take the right jab 10 years from now. This is setting up perfect control for a major population. And I think that the easiest example I give anyone who has a debit card, who's traveled, any American listening would know this. You have a debit card, you land in Paris, you go to get a Big Mac, and your card is rejected because your credit card company saw that, well, you were in New York this morning, now you're in Paris. We think there's a security threat. You can't use your debit card now. You have to go through a bunch of hoops, call, give your mother-in-law's maiden name, whatever, and they still may not give you your card back. In other words, you feel like it's your money, you have it, it's there, but you can't use the card to buy anything. That's a very helpless feeling. I think all of us have felt it sometime in our lives, where what's in your wallet you can't use. Okay, you can solve it pretty quickly. Imagine what happens if that happens and you can't do anything about it. Your e-dollars are frozen. Somehow your social credit score did something, or somehow you were traveling where you weren't supposed to be, or you thought you could be, and you can't use it. That may sound hard to imagine, but it's exactly what these stable coins are setting us up for. In addition to paying Uncle Sam a lot of money and making fintech guys even richer, you're getting nothing but more control and no yield. So that's stable coin in a nutshell, Farzin. And I'm simplifying because it's appalling. And yet it's just frog boiling us right into more centralization, which always happens when you're debt broke like America is.
That is exactly right, Matthew. And the other thing was, I always used to say, why CBDC was a solution looking for a problem. They already had the solution ready. And if you just remove the C from the CBDC, we already had bank digital currency. And stablecoin is exactly that now. It's BDC. And as you mentioned, the truckers in there, we didn't have to use CBDC for them to block their accounts. It's just a bank account. So they can call JP Morgan and say, hey, freeze all these accounts. And that is it. Matthew and Farzin said this thing, we don't want them to use the money. Or I think in the UK, they've now said, I think people are going to be allowed only so many flights a year. I think Europe's going, sorry for my language, batshit crazy on all of these.
Yeah. No, there's wealth registries now. You have to show your wealth. You have to show if you have boats, or you have this kind of, it gets categorizing citizens now into the haves and have-nots, which again, there's massive wealth inequality in Europe. It's nothing like what I see in the US. And whether you're wealthy or not wealthy, that should be insulting to you as a citizen. I understand the hang the rich mentality. I understand the sentiment, the frustration of the wealth inequality, especially in the US, especially as a guy from the lower middle class who has polo pictures behind him. I totally get it. And I'll tell you, one of the things that's really frustrating is when I'm in Switzerland, in Zurich. It's a very wealthy town with very wealthy citizens, but the wealthiest cars, the Bentleys, the Ferraris, the Porsches, they have Ukrainian license plates. Why? Because there was so many bad, corrupt deals made of so many corrupt. Everyone knew before the war the most corrupt country in Europe was Ukraine. The whole Zelensky crowd have made such a personal fortune. They're coming to Switzerland to hide with their stolen money that U.S. taxpayers paid for. I literally see that with my own eyes. So there's so much frustration, and I can understand people saying, freeze the assets of these people, but they're freezing all our assets at some point. They're setting this up. This may sound extreme. Not that every dime you or I have is going to be frozen, but the fact that they can is terrifying. Egon von Greyerz and I are not doing anything that we are afraid of that's illegal. We have nothing to hide, but we like the freedom to know that our money is protected outside of that system, which is why we've been arguing for physical gold for decades. It's not that we are afraid or we have something to hide ourselves. We just don't want anybody else telling us what to do or seizing our assets. And that's what the Stablecoin Genius Act just crept in. It is a wolf in sheep's clothing. And all we're hearing is the buzz, the technology, the speed, the efficiency. We're not seeing the darker side, and we're not seeing who's profiting and who's losing. But that's nothing new in American or global politics or financial markets. It's always the whales masquerading as support when they're just sucking the plankton of the middle class right down their gills. This is just business as usual for banking, politics, and currency.
They're too big to fail and too big to jail, as they say. And I tell my listeners, when obviously the common sense is banking also is misunderstood because people think, it's, as you just said, can't use your own money. But the terms and conditions, when you deposit money in the bank, it ain't your money anymore. You've lent it to the bank. That's why you get a yield on it. As the minute it's in the bank, you're getting a yield on it, and there's a risk factor. And that is why gold held privately in a vault, or whether you go midnight gardening below your house or whatever, is the only asset that is nobody else's liability. And you're not trying to earn a yield on it. Yes, it costs you a little bit to store the gold or the silver. You sleep better at night. That's what you just sleep better at night.
That's our business model, Farzin.
Yeah, I know. And that's why I wanted to bring you on the show as well, because the simple thing is, as I've told my listeners, the times we're going into isn't about getting rich quick. It's about who's going to lose the least. That's how you're going to get wealthy. And one thing you mentioned in there in Australia, well, not so much in New Zealand yet, but they're talking about an unrealized capital gains. I know it came up under Kamala Harris in the US as well. They're coming up with stupid policies just for the sake of it. How do you unrealized capital gains? And then when you lose the value on it, are they going to refund it to you? I don't think so. How are normal people accepting this? Are they just all brainwashed, or they just can't do nothing till the real revolution begins? Your views?
I think that's a great question. I think the plumbing is so intentionally complex, and so the plumbing behind so many of these mechanizations, you have to sit and really think about it. And so A, it's complex. And B, they kind of frog boil you into it slowly so you don't see yourself getting frog boiled. So the complexity, the frog boil, and then I think the other thing is just the dishonesty, the lies, the lipstick on a pig. This is for efficiency. The Fed was created under a bill called banking reform. That's how they called the birth of the Fed. They come up with clever words to hide really bad policies. And so these kind of tricks, including tax tricks, either you're too impotent to fix, it's too complex to understand, or it's happening so slow you don't see it until it happens all at once, and you realize anything can be taken, you don't have control, you have no autonomy, you have no escape, and then you just hope the government takes care of you, and you bow to them and hope they're fair and good and decent to you. That's up to each person to think. Some people do trust their governments, and I'm not here to change that view. That's up to them. I don't want to be condescending, but and I'm not saying that everything's going to go to hell, but from the simple to the complex, as countries get broke, they get more desperate, more centralization kicks in, less freedoms come. That is throughout history the same. Even something as simple in Europe, which I've seen in the last 3 years, is the ubiquity, the number of radars on the side of the road to give you a ticket, whether you're driving to get groceries or whether you're driving across the country. It's like a minefield. It is not for security. It is a revenue they are taking from the people. And this goes back to Adam Smith and John Adams. He says, look, the countries borrow from each other. When that doesn't work, they borrow from banks. When that doesn't work, they go to war. And when that doesn't work, they just steal from the people. And that's kind of where we're at now. We're stealing from the people in the names of these different policies, tax policies, road security policies, crypto policies. It's just taking from you. And eventually with stable coins and other kind of scary side of the digitalization of the world is they'll just click and your card, so to speak, like at that airport is no longer accessible. And then you are frozen. You have been punished for thinking too differently than the rest of us or spending too differently. If you're trafficking children, arms, nuclear weapons, and drugs, freeze them all day long. And the problem is that's the story. That's the nice side. I'm not in favor of supporting those people. Freeze their assets, end that war on drugs. I'd love to see that. But the real problem isn't, that's only half the story. The more dark side is when you're just someone who thinks differently, or when you're just someone who wants to critique the government or pose a hard question to the government. When you become a threat to that, then you're frozen. And America has this wonderful story about how all these brave men got together in Philadelphia and in Boston and rejected the illegal taxation and without representation of the Mad King George. And we envisioned this idea of a free democracy and a real government and a gold and silverback currency and independence from tyranny. Okay, wonderful story. And most of it's true. But if those same people were alive today in 2025 and the Mad King George was still here in 2025 with stablecoin, it'd be very hard to get George Washington, Thomas Jefferson, and John Adams in a room to make any decisions for the good of the people. This is the real threat that no one wants to talk about. And that's why it concerns me. AI, stablecoin, this whole modernization, feel-good narrative has a lot of darkness behind it.
If we run a business like governments run the country, we'd probably go to jail. It's a Ponzi scheme, right? But if they do it with endless deficits, inflationary policies, it's okay. It's actual policy according to them. And that brings us back to the start of the conversation. We're not taught about inflation. Inflation is baked in the cake. With every dollar that's created, you've got to pay interest on it. Where does the money come from? They've got to create more money, which means the entire system is based on inflation. And that is why the founding fathers had gold and silver. In fact, I think I'd done some research a couple of years back when I was getting interviewed just to see the New Zealand dollar. When did that come into effect? Because the central bank, again, people don't understand, central banks create the notes. And the other credit is created by the banks, by mouse click money again, right? And I'd done some research back then, and after the Federal Reserve was created, again, if you put a conspiracy hat or tinfoil hat to do with the Titanic, and I'm obviously going to be interviewing Mr. Edward Griffin, who wrote the book, The Creature from Jekyll Island, next week. So we'll go into that a bit more. But even in New Zealand, believe it or not, and it's clearly on Wikipedia, the New Zealand government confiscated citizens' gold. They had to hand it into the central bank, and they were issued Reserve Bank of New Zealand notes. It's just a note, a piece of paper, confidence, fiat currency in the government that keeps it going around in circles. And I've explained it too many times to people. It's just a piece of paper with number 50 on it or 100 on it. And it has nothing more to it. The day, like Zimbabwe, people lose faith in the government, that becomes useless. And that is when gold is what will hold through centuries and stuff like that. Do you want to talk about just what you guys do at Gold Switzerland and why, obviously?
Well, precisely, we address the very things you're worried about, Farzin. I mean, look, we're all former bankers, almost all the partners, with the exception of a couple. And, we all understand banking risk because we've been in banks and because we've studied banking like you. We see the currency risk. And we've known this for decades. And we see, again, not tinfoil hat at the end of the world, but banking risk, debt risk, currency risk, geopolitical risk. This is what we were based on. We wanted money, hard money, outside of that system, outside of that banking system, with no counterparty risk, to your point, and that cannot be created with a mouse click. That cannot be, an asset that is real money that can't be debased, and it can't be hypothecated by a bank or frozen by a bank, which means gold and silver in a private vault outside of the banking system. That's our business model. And we have clients from over 90 countries. We run a great deal of assets. Our AUM minimum is very high. So we only really appeal to institutional high net worth family offices or high net worth individual investors because that's all we can serve. But our message about gold outside of the banking system is good for anyone, whether you can afford an ounce or a gram or a kilo bar. The message is real money, real protection, real wealth preservation, and real wealth itself cannot be measured in fiat money that is a melting ice cube. It has to be saved in physical precious metals, which is, by the way, what central banks are finally doing now. They're saving in precious metals and spending in fiat. So it's a very simple model. There's a lot of complexity in how good our security is, our communication, our privacy, all that. But the model is exactly what you said. No counterparty risk outside of the banking system, in your name, physical asset, access audited whenever, segregated, allocated, yours only, not levered, not hypothecated. That's it. Yes, it's held in a hole in the ground. That is the counterparty risk. So we have to have a good hole in the ground, no debt, total security, and 100% access. So that is how we've built this model that Egon started with his own money decades ago, in a small circle of people, and now it's grown into a major international business. I think we lead in the private precious metal space for high net worth investors in gold servicing. And it's no coincidence that the things Egon saw decades ago, when he was critiqued like James Turk for being too negative, well, in the meantime, his gold price he bought at 300 is now at 35, but more importantly, he's still saving in gold. He's avoided all this risk. He sleeps better at night. It's that simple, that boring, and that smart. And so, sometimes simple and smart and boring are all in the same thing. A Chanel dress is still a Chanel dress. A glass of water when you're thirsty is simple. And I always say in France, a baguette is still just really good when you're hungry. And this is a very simple, elegant way to deal with a very complex, noisy, broken financial system and a currency system on its knees. And that's our model. And we're at goldswitzerland.com. or vongreyerz.gold or vg.gold. And all of these thoughts and interviews and white papers can be found there.
Yeah, because you guys also write quite a few good articles and do interviews. And obviously, as you said, high net worth, because I believe yours is the most secure vault in the world. It's nuclear proof, earthquake proof, all of that. But you do offer some clients in Singapore as well, I think now, and other jurisdictions as well. So obviously, but again, your messaging. Spend in dollars or whatever your currency is and save in gold, because we know the system's coming to its natural end. Doesn't matter how they kick the table over, kicking is coming. So better prepare and save yourself from what's coming. Hey, Matthew, just towards the end of this, I do a kind of a quick fire round. I know how you might answer some of these, but I'm just going to go. Yes, well, pick one, and one for which reason. I'll decide which one I want to pick for you. Bitcoin or gold?
Gold.
We know why.
And then why? Well, gold for...
Yeah, no, go on.
It's a better store of value.
Better store of value because...
Better store of value.
Because, nothing against Bitcoin as well for me as I speak to my guests. Philosophically speaking, I like the concept. Yes, it's easy. You can travel between countries. And I was talking to a guest just yesterday, and we were talking about in Australia, I know a person who was just carrying a USB stick. We just have Word documents on it. And they stopped him in customs thinking he might be carrying some Bitcoin. So the world is getting a bit dicey, but I think stablecoin was created, stablecoin or CBDCs were, your Bitcoin was also created to get people used to certain things. It's a blockchain. The government can see exactly what you've done on that block or on that chain, and it can be stopped. Whereas again, so we know your answer, Bitcoin or gold. Anything you want to add on the Bitcoin piece at all?
No, again, like as a speculation asset, it's fantastic. It certainly has a higher annualized return than any asset class in the history of anything. It's incredible. That's both good and bad. I'm not mocking Bitcoin. Its standard deviation, its volatility, and its correlation to the NASDAQ are still a problem for me as a store of value. Its ISO compliant blockchain technology and all that is fantastic. Its portability and all that is fantastic. And certainly the returns it's made for certain investors is fantastic. I'm not anti-crypto or anti-Bitcoin to be pro-gold, but as a store of value investor, I can't put crypto in the same camp at all as physical gold. As a speculation asset, I can't think of anything more interesting. Let's put it that way.
And some people say, oh, the government might confiscate it or take it off. Yeah. Even if that's not the case, the risk where I see with Bitcoin is with this war coming up, if there's an EMP attack, which Russia has the possibility of doing, if there's no internet, if there's no electricity, you can't use it. Whereas gold, you can still take your coin or silver, as people in Venezuela and Brazil do. You can still buy groceries with a gram of gold or silver. Where would you invest your money? Commodities or the actual mining shares?
Depends on what my goals were. If I was really looking to go out on the risk branch for better speculation, better juice, I'd go into the equities. There are, if you know how to pick the right mines, I think that's a generational wealth opportunity. If you can stomach the risk and you know how to do the due diligence. If you're going to go right for the metals, whether it's copper, zinc, nickel, or gold or silver, whatever, any hard asset, you've got to have a much longer term view and holding period and conviction, and probably a more conservative bake. So it really depends on what type of investor you are, what kind of speculator you are, what kind of wealth you're looking for. The equities in the mining space for the few are going to do extremely well, and that's going to be generational wealth for the ones who pick those.
Your views on AI, good or bad?
Terrifying, because AI to me is just like another meme. It's only as good output as its input. It's definitely mega computing. It's incredibly faster. Absolutely, compared to Google, a ChatGPT is extraordinary. So AI process is much faster, but it's not wiser. It won't have to explain itself, for one thing. Well, ChatGPT said so. That's it. And I think it's incredibly deflationary. I think the idea of a Starbucks with 2 people and 100 robots is dystopian, not modernization. I think what it does to labor force is appalling. I think what it does to the IQ of the average already celebrity mad population of idiots is debilitating, because you won't have to think for yourself. You'll just report or repeat what you've been told. The ability to do critical thinking, critical examination, critical reading, underlining, etc., will just disappear, and you'll just go into ChatGPT or AI mode. You can even put a chip in your brain and learn Chinese. That's not the same as living in China. So that, to me, it's horrifying. I also don't think it's fair valued at this point. I mean, DeepSeek versus Sam Altman, these are things you can spend a lot of time on. I think there's nothing we can do about it. It's coming. I think it's not wise. It's just faster. It won't have to explain itself. It will take over more and more jobs. It will be deflationary. And I think when you look at the example of like diagnostic robotics or the DARPA director when they used AI for IEDs in war and diagnostic robotics during COVID, their actual results were no better than a coin toss. So I'm not even sure they're effective. They're just faster. But that doesn't mean there won't be a lot of money made in AI stocks, like there wasn't a lot of money made in .com stocks, electricity stocks, train stocks, or car stocks in prior bubbles, which I've studied or traded. So this is just another new meme. It's very important. AI is a turning point. It is not a saving grace.
Yeah, there's something you brought up there. Sorry, I'm just going off topic, but you said something about obviously AI. It's kind of, how do we put it? Not inflationary, but deflationary in a way. And I heard this point of view the other day where they said the demographics are changing in certain countries, and countries like South Korea and Japan, which has low fertility rates, traditionally used to be seen as a problem because of the fertility problem, because of the tax structure. You need newer generation coming in to pay taxes for the older generation. And the viewpoint was flipped that maybe because of AI and maybe because of COVID and the people dying and the fertility, maybe there'll be less chaos or civil wars in countries where there is fewer people. Because in a country like India, maybe if artificial intelligence comes in and a lot of people are jobless, maybe we have a problem. Maybe we have revolutions. Maybe people rise up over governments. That was quite a contradictory view, which I heard the other day.
It's interesting. It's interesting. And again, it's not for me to determine which is right or wrong. These are things we have to think about. And each of us have to determine, is government, is tech, is markets, are all these policies generally with the altruistic aim of helping as many citizens as possible and doing the right thing? I'm sure there are some politicians who mean absolutely the best, but in general, if you start from a premise where that may be something you don't believe, then you got to look at all these trends with a more skeptical eye. And that's not for me to tell you how to look. I'm clearly more skeptical. I have that bias. My study of history and the study of these recent arrangements, especially when you get towards the end of a credit cycle, which is where the world is right now, my bias is this is actually a very bad time to be trusting what's said and done, whether it's tech, whether it's trade, whether it's banking, or whether it's currency practices. To me, as we get towards the end of a credit cycle, most of what you hear is the opposite of what it really is, including the Genius Act, as we talked about.
They say, do you know when a politician's lying? When he opens his mouth.
Yeah, exactly. It's part of his job. Yeah, I was going to say, it's pretty much all the time.
It attracts psychopaths and pathological liars, they say, politics, right? So just one last question for you. So if you had to pick between cash and stable coins, which one would you pick?
Probably, I mean, it's a great question. And the only reason I'd pick cash is, at least, even though I know it's losing its value, I'm staring at it, at least it's in my own possession and can't be shut down unless someone literally takes it out of my hand. I think stablecoin is a heck of a lot more efficient, but the fact that it's trackable and seizable, I'd rather just have cash.
Fair enough. The reason I asked that because it was, again, if you might know, in India, there was demonetization. The Prime Minister can come on the news one day and just say, hey, we're canceling all these denomination notes, and it's happened before. So I want someone like you to just have an input. Okay, we're going to end this, and now there's some fun questions coming just to get to know Matthew a little bit more. The best advice that you have received from someone, Matthew?
Never abandon your own judgment. Just make sure it's informed judgment. It's one thing to have an opinion, but make it informed. Then you should defend it. But that's what JFK said. There's something immoral about abandoning your own judgment. What I see too much is emotional arguments, emotional judgment, but no informed judgment. And if you want to be independent in this world, it has nothing to do with money, it has to do with your thinking. And if your thinking is informed and you've done the work, then that gives you certain freedom that nothing else can give.
All right. And is there a favorite funny story you like telling your mates, or a beer or wine?
About myself or about
anyone? It's a funny story you like sharing with your friends or family members, or...
Oh my gosh! I mean, they're not stories I want to tell anyone in the internet. I've done some pretty stupid things. Oh gosh, that's a great question. I wish I'd kind of known that. I would come up with a G version. I mean, I think one of the funniest stories was when I was learning to ride horses, and I was bragging to my friends how good I was, and this was like when I was a teenager, and we're all full of arrogance and ego. God knows I am. And I had invited a bunch of guys to come watch me ride, and I was basically there to show off. And they were all there, and there was me running around in circles and doing all these fancy things. And then within 36 seconds, I just got tossed and was knocked unconscious. It was the perfect moment of pride come before the fall, a really humbling moment of hubris. And I think that was a funny story. But yeah, that's about the safest one I can tell out loud. What's really funny too is when I'm in Zurich and I see all these really sketchy, corrupt people driving around in Bentleys. I find that really funny almost. We're seeing these rats leaving the ship making a lot of money. That's tragic funny, but it's not really funny. But it always makes me just shake my head when I see a lot of that now.
Thanks for sharing that. Hopefully we'll catch up for a beer at some stage in the future, and then you can tell me the other funny stories you don't want to tell the audience. Just one last one, Mike. I run a financial consultancy called Success Simplified. So I always ask people, how does Matthew define success?
Not with dollars and gold or silver, that's for sure. I know that's not the right answer for a financial program. I take money very seriously. I take the freedom that money gives me very seriously. But the more I study history and people, and the more I study philosophy, and the more I've had the shiny new car smell and the frickin' polo games and the good things that money can buy and the freedom, and I don't apologize for it. I think it's wonderful. But the longer I spend on this earth, this is something Egan and I absolutely agree on, all those things are great, and it's certainly hard, as Frank Sinatra said, but it's harder to be poor than rich when you're struggling, and the stress it creates on you when you don't have money for mortgages, tuition, taking care of your family, that's devastating. But once you reach a certain point, you don't need to be millions or billions in, where you can take care of basic needs. I think the most important thing for me is the thing that you'll think on your last breath will be the few friendships you've had. You're lucky if you have one or two really good friends. You're lucky if your wife still talks to you and your kids still respect you. And you're very, very rich if you can accomplish that. That's what I'll remember. It will never be anything that I can measure in gold, silver, money, real estate, all that other nonsense. And I'm not trying to be smug. I'm not trying to say it's not important to be ambitious or to try and be free from financial stress, because that is very high stress. I come from that as a child in a high stress, financially difficult family. That is debilitating. But you don't need billions or millions to be extremely rich once you can take care of the basics. And anyone can protect themselves with a little bit of silver and gold and a little common sense and spending, unlike your government, within your means. And that's my takeaway.
Thanks for sharing that. Anything I might have missed that you would like to share with our audience at all, Matthew?
I mean, again, we could talk for hours, and we're always going to miss something. But you certainly hit a lot of important things. Things.
I appreciate your time. I'll put the links to the website for people to reach out as well. And hopefully we can do this maybe in the next couple of months, 3 months' time. Thanks for your time, Matthew.
My pleasure. Thank you, Farzin.